Opportunities and readiness for capital markets, lessons from successful African experiences. Our presenter is Henry Lesika, who is joining us virtually from Tanzania. I don't know whether that's ready or not. Is it ready? All right. So Henry is head of balance sheet management at NBC Bank, which is part of the Absa group. In his role, he is responsible for bank's liquidity, interest rate risk, and fund transfer pricing, among others. Please put your hands together for Mr. Henry.
Thank you, Jonas Stefanos. I will be very brief. Good afternoon, ladies and gentlemen, and thank you for having me. It's a privilege to have this opportunity. I'm sure you can see my presentation, so I'll just move directly to the first slide. And this slide, basically what it does is just gives a brief highlight a few facts relating to provision of financial services. And the data is compiled to actually show sub-Saharan Africa with respect to other areas or regions. What I did also is to just select those regions that I think to some extent, some of them are close to Africa, for example, Caribbean and South Asia, in terms of, the economy size and the level of market development. And if you look at this data, you'd see we are still very much behind in terms of our reach of our banking services to the population. If you look at the first data, for example, commercial branches per 100,000 adults in sub-Saharan Africa is only 4.1 branches, where you have in Caribbean at 8.7, and do not even mention European Union at 21.1 branches per 100,000 adults. So basically, it's just that kind of data to just give you a sense that there's quite a lot to be done. If you look at credit to the private sector by banks, we're still faring the lowest. You can see only 27.2% of our private sectors getting these facilities, whereas developed markets like Europe are at 88.4%, and the average, the global average is around 95%. So there is quite a lot to be done. And then also in terms of loan rejection, if you look at the data, it's also similarly, we are, of course, have the highest, next highest rejection after South Asia. And then at the end of the data is the access to finance as a major constraint for businesses. We also have the highest rate. So basically, the purpose of this slide is just to show that these are challenges, but on the other side, these are actually the opportunities for capital markets. And I'm pretty sure this data is reflectively, because even my personal experience here in Tanzania does indicate this kind of level. This is a data from the World Bank. So Ethiopia, similarly, as you're going through the process of development of the capital market, I think you have a lot of opportunities, and these are the areas that you can bank on. The people that need banking services are the same people with surplus funding looking to a place to put their money and get a return. Those are your investors. The firms that are looking for facilities are the same firms looking for capital, either in form of equity or in form of debt. That's, those are your demand side of the capital markets. These are the ones that should be issuing debts. These are the ones that should be issuing equity. So the other thing I thought personally that would be relevant to this discussion and would also help Ethiopia towards the development of the capital markets is the journey that we went through as a country in Tanzania. Our market is also not very old. It's, relatively very infant if you compare to other markets, even if you compare with Kenya, for example, let alone a country like South Africa that had its market more than 100 years ago. But ours is roughly, the journey is about a 30 years old journey. And it started during the 90s, where we had those economic reforms, which were, built up since the early of the structural adjustment programs of the IMF and World Bank. But around 1995, we had already reached the stage of having the Capital Market and Securities Act formulated or passed by the parliament and gazetted. So that was sort of a major milestone in the development of the capital markets. I think moving on to the next year, the capital authority itself, the institution was already under operations. And of course, the second stage of the exchange itself was also incorporated the same year. And I think this is around where Ethiopia is right now. You already have in place your regulatory authority, you're working on your regulations, and the securities exchange has been incorporated. So just 2 years down the line, we had our stock exchange also operating, and we had the first listing, which was actually a state-owned entity coming out of the privatization by the government, which is quite close to what Ethiopia is planning. My understanding is your initial plan is to have at least 50 state-owned entities privatized through the capital market, which I think is a good step. And then, not to go step by step, but then after that, there was a cross-listing, which is a major milestone. And then around 2013, I think this is a key milestone as well, another window of the stock market, the enterprise growth market, EGM, was established. I think this is important to highlight because this is another segment apart from the main investment market. And this segment offers small and medium-sized enterprises that do not really qualify for the main market in terms of the business historic operations, in terms of financial performance, but they have a very good business case and potential to grow. So this market was developed, and if you look at criteria, we are very much softened up to allow a lot of participation of enterprises in the country. And of course, its framework as well was properly structured. Madam Rose there spoke very much of governance. I think the framework was very much structured to support this kind of institutions because, for example, there's a requirement to appoint a licensed nominated advisor who basically will guide the firm through the process, but also through the operations so that they can mature and go through the investment market. So I think this is another major milestone. Another major milestone to highlight here is around 2014 when the main capital exchange was opened, the commodity market. We have now a commodity exchange separate from the stock exchange. This will also pay out good. I think we'll discuss this in details in the later slides. And then another key was in 2015 where there was a remote trading that was launched, and dealers and brokers were able now to actually do their transaction or do trading at the office. Previously, they had to physically walk to the exchange and sit in the trading floor and start shouting. But now they were able to do this remotely at the offices. So if you remember the case of Madam where you had to do a couple of files of documents to get one trade completed, I think this was a milestone that actually also addresses that. So one other thing to note maybe also is, as much as regulations are important, I think the market was quick. You'd see it, the commodity exchange, for example, was actually started in 2014, but the act itself came later on. But already there was a lot of progress in forming the institution and start identifying the processes and structures of trading of these commodities. And then in 2018, there was an operation. Another major milestone is the starting of the Dar es Salaam Enterprise Acceleration Program. This is another key thing, I think, for Ethiopia to learn from. You'd see this is a program that the stock exchange has started to actually support those firms with potential to actually grow by actually providing the access, linking them with funders who are like joint, that like venture capitals, angel investors, and also provide them with technical skills and support so that they can form in something more formal and something more capable of entering the stock exchange. So these are the things that can be done, especially when you come to getting the market be useful to the wider community and inclusive economic participation. And then 2022, DSC launched the mobile trading platform where you could basically put your order and buy equities or bonds through a mobile application. These are key things, and I think we'll discuss them in the later slides, how they fit into the overall plan to actually have a market that is flourishing, but also being able to take advantage of the opportunities. So as of now, we have 28 equities listed at DSC. We have 4 corporate bonds and about 1.2 billion of government bonds. This is dollars floating or trading in the market. And then around 4, I think now it's more than 4 commodities also trading at the commodity exchange. Moving on to the next slide. Out of the process, I would try to highlight a few success stories. So there are about 8 state-owned entities that were privatized and subsequently went public and listed at Dar es Salaam Stock Exchange. And this, you'd see the year, they were all listed and went to IPO prior to 2010. And if you look at these graphs here, let me try to maximize this. If you look at these graphs here, all these entities are performing very well. And to be fair, this is a good reflection of how a privatization and availability of capital market can support the continuity and the performance of our corporates and institutions. And if you, for example, at the current stock market, including the private firms that don't have a state-owned background, basically, actually, the ones that are state-owned have the ones that have the highest or the best performance in the market. Even Tanzania Oxygen Limited, the one you see here, which originally was sort of slow to catch up and had a lot of issues, but over time it managed to reorganize itself, and now it has actually performed very well. We see revenues going up, but also the stock price has actually gone up now. It used to trade below its IPO price for quite a lengthy period of time. So after the brief history or background, there are things that I've picked up and the things that I think Ethiopia can pick on and make good use and be able to harness the opportunities and the benefits of the stock market. Number one, when you are going through this process and when you are creating your capital market, do not spend a lot of effort or energy do not chase the market capitalization. I know it's tempting because usually all international news, all the international indexes and financial information data gives a lot of attention and focus in the market capitalization. So it's very tempting to get your market capitalization grown by actually getting a lot of listing to come through quickly. But I think it's much more important to pursue liquidity. Liquidity is much important because when you have a very efficient and liquid market, the institutions, they will come naturally. It will grow organically. Everyone will want to list because they will definitely identify and see the benefit immediately. And that will naturally grow your market capitalization. So yes, as much as market capitalization gets the headlines, but I think when you have an efficient and liquid market, that's where your energy should be focused on, especially during these early days of development of your capital market. This is where you will win the case in the long run, even with the capital market capitalization. The other thing also, which is also tempting, and of course, this has been the case when you have an autonomous state-owned entity or regulators, an autonomous regulator, there's usually quite a lot of pressure for them to be self-sufficient, to be able to run themselves without government support or subsidies. And because of that, most of these entities tend to put a lot of fees and commissions in the services they offer and charge any, this form and this form of fees just to be able to get enough money to run or to be independent and self-sufficient. This, especially during the early days of capital market development, is something you should be very conscious of and be aware of and try to avoid as much as possible. Focus on pursuing efficient, and it's important for the government to understand this and support the regulator, the ECMA, but also even the exchange itself, whether you do it as a state-owned entity or it's a private institution, to find a mechanism to support it in the early days so that it can be able to operate without putting a lot of pressure to investors and listed firms in terms of fees and commissions so that they can self-sustain. So this is a key things to observe as you develop your capital markets. And then, of course, I think this has been talked about a lot, but technology to decentralize application of technology. I think Rose also spoke of it very well. You should be able to actually take technology early on. There's no need of you starting where we started or where Kenya started. You guys can pick it from here, because apart from learning from experience, technology has been much simple and easier to acquire and easier to implement now compared to previously. So if you use technology to decentralize, that means access becomes easy. People can actually enter into the market and exit the market from wherever they are. They don't have to physically walk to Addis Ababa, for example, or to actually have to write emails or send letters or make many calls around that. So decentralize the services, the technology to do that. This is another key area from experience. And then also apply the same technology to provide simplicity. Make it easy for somebody to actually get information. Data is very important. Make it easy for people to get data about the market. As stated again, I mean, the availability of data and simultaneous availability of data to all market players is very important to avoid the data asymmetry. That is key to functioning success of a financial market. So you should be able to use this technology, have simplicity, make it easy on the availability of data, but also make the use of the platform easy. Make it easy for people to install the apps, make it easy for people to use these applications or platforms that will be available for accessing the services of the capital market. Also, another area that you as Ethiopia, through your journey, you can make use of is incentives. We'll discuss a bit more later on the incentives, but I think we should avoid to push listing or growing the market by using regulations. And I'm saying this because we have a practical example and experience here. Our Mining Act and our Telecommunication both usually require actually the regulated entities, meaning the regulated companies that are in the telecommunication industries, the mobile network companies, the satellite services providers, the television services providers, to actually list at least 25% of their equity in the stock market. Similarly for mining companies. And this act has been there since 2010. But so far, it's only one communication company that has been listed. And to be honest, the performance of it has been not very good. So far, its current market price, it's below its IPO price, and it has not moved since for almost a year or so. And this is because neither side were ready for this. Neither the issuers, meaning the companies themselves, regardless of their performance. Some of these companies actually are performing very well, but they were not ready for it, and they may probably not see value in it. But also, I think investors themselves probably were also not ready to enter into these entities because they understand the back then also. So by actually using regulations to push for listing, you end up having entities in the illiquid market because the market itself is not ready to accommodate. But if you provide incentives and naturally and organically, entities see value into entering into the market, as well as investors see value into entering into the market, it tends to grow a market that is efficient and very liquid and very vibrant. So this is another key point to observe, and I think it's a very important point. So where do I see opportunities as we enter to the market? Equities and debt, meaning bonds, are the bread and butter of a stock exchange. Okay, so immediately you definitely have a couple of entities that will come in to issue equity. Probably already have some lined up, and I understand you also have some state-owned entities lined up. Equities are bread and butter of stock exchange, but there's quite a lot more lot more opportunities in other areas that are unexplored, especially in Africa, and even in Tanzania, we see a lot of potential coming, and I see already, for example, our regulators already working on some of this very well, and a lot of action has been taken by the exchange itself now for some of this. Startup finance, a lot of startups struggle to get finance, and the blame has always been to banks. But let's be honest, banks are not good at financing startups. Banks need a proven case. Banks need to see historical performance, because banks lend depositors' money. Banks are regulated by central banks, and they are lending depositor money. So there's quite a lot of regulations to ensure the depositors' money is protected, because that is the core of the economy. Capital market offers something different from the banks. It offers investor direct access to take a risk that they know from day one and are willing to take. When you invest in equity, you know this is an equity, and you know the risks associated to that. When you invest in the debt, you know that, and there's quite a lot of potential in terms of benefit as well, in terms of equity that can come through. So when investors come to the capital market, they do that with that understanding, and because of that, there's availability of much riskier capital is higher than for these startups to go to bank. So this is an area you can look up. And as I said earlier, we have, for example, in Tanzania, the EGM, Enterprise Growth Market, that has been up and running, and quite a few firms have come there to raise capital successfully. And then again, I mentioned the Enterprise Acceleration Program. It's not an equity market itself, but it's a program that is meant to facilitate the growing and the molding and the structuring of these startups and small SMEs to reach a point where they can be viable stock market issuers. And then ESG, this is a global trend, of course, but again, there's also quite a lot of opportunity to access concessionally priced funding when you have a window to support ESG. And this is also beneficial because you also, add into the sustainability of our good planet. And then hedging instrument. I think this is another area that is lacking substantially in African markets, ex-South Africa, and probably a few other relatively. But for example, being a banker, I know we do struggle a lot to get instrument to hedge some of the exposures that we have in our balance sheet, because the markets have not yet developed these products. So by working with banks and other institutions in the financial sector, the stock market has an opportunity to grow. The capital market has an opportunity to grow in this angle by having new hedging instruments, develop new hedging instruments, and broaden your product offering from your bread and butter of equity and bond. So this is another development area in the area of opportunity. Commodity, another area. In Tanzania, we already have a commodity exchange in place, and improvements are coming in every day. We've seen it growing, seeing new products coming, and we see a lot of improvement in terms of the process and the warehouse handling. Ethiopia has also an opportunity to make use of this. I know coffee is big in Ethiopia. The volumes are substantial, almost $2 billion, I think, dollars a year, if I'm not mistaken. So if you can make use of that window, of that product as the first stepping stone to get into a broader commodity market, this is an area of opportunity and development for Ethiopia, seeing from where I sit. Then you have the precious metal. Ethiopia, I know, is also good in gold. In Tanzania, we are yet to have a precious metal trading in a formal exchange, but there's a lot of work that has happened already where government has set up sell and buy points in areas that have a lot of gold activities, for example. So it has started to formalize even the artisanal miners, the small miners who usually used to buy gold and start selling it in the street, or have to find ways to escape with it to outside Tanzania so that they can sell it. Now they know they can go to specific points and buy them. As well as buyers, they know they can go to specific outlets and put an order to buy gold from the small suppliers and even accumulate sufficient order to export with a properly defined export mechanism, certification, and quality assurance. It's already in place in Tanzania, which is a significant step. If you want to move to the exchange, it's going to be much easier starting from a point like that. So if this is another area, precious metal, that Ethiopia can embark on. Request to end here. I think my intention was more of putting a platform so that we can start an engaging discussion and explore more this opportunity through the conversation and question and sessions that we had. I thank you very much, Mr. Jonas Stefanos. Back to you.
Thank you, Henry, for an interesting presentation.